Alright, hello everyone and welcome to another accounting video. Alright, today we will be looking at some accounts and how to classify them to the respective elements. Alright, so let's get started. Okay, first up on the list here, we have discount allowed. Okay, discount allowed is an account which is to mention about how the business gives a discount to a credit customer in order to encourage them to pay their debts earlier. Okay, so this is a cost to a business and we record it as an expense. Okay, on the other side of the equation rather, okay, we have discount received, which is basically a discount that the business gets from the credit supplier for paying early. Okay, so since this is a form of earning of a business, we would record this or classify it as an income. Okay, as mentioned in the previous video, stationery based on the materiality theory, okay, it is recorded as a as an expense. Okay, so it's a cost to a business. All right, next up we have bank charges. Okay, bank charges is basically a cost to a business for using some of the bank's facilities, or rather some of the services provided by the bank. Since it's a cost to a business, we will count it as an expense. Okay, bank overdraft is an owing to the bank for a few days to a few months because the business has overdrawn or the business has taken out more money than in the bank balance in the bank. So with prior arrangement and the bank agrees, okay, the business will owe the bank some money which needs to be paid within a few days to a few weeks. Okay, and this is an obligation, therefore it's an liability. Okay, fixed bank deposit is basically money kept in the bank, and normally this amount here is what the business owns, and the business can earn some interest by doing so. So since it's a resource that the business owns, we will count it as an asset. Okay, rent expense from the term here, okay, basically is an expense. Okay, what it means is the business has used up some space and this is a cost to a business where they need to pay a supplier. Okay, on the other side, we have an income here, rent income. Basically, the business has some unused space and the business lets other people use that space and collect money from them. So it's a form of earning to the business here. Okay, rent payable. Okay, as we have learned previously from the word payable, means the business will pay someone in future. So it's an obligation of the business to other party and it's a liability. So this is an owing by the business to other parties because they have used up this service called rent. Okay, something that you will learn in future, prepayment. Okay, prepayments are resources from the business. The business will gain future benefit in the form of services. Okay, not to worry, since it's a future benefit, we would term it as an asset. But you will learn more about this account here in subsequent videos. Alright, moving on. How do we identify accounts that are at the top of the table here? Okay, given common phrases. So if we were to observe the phrase here, repairs, okay, the closest match would be a repair expense. Okay, next we have insurance against fire or flood. Okay, this is another cost to a business where the business may want to purchase some form of insurance in order to protect themselves should something negative happens. Okay, and this cost here is an expense. Okay, so a cost to a business is an expense and the item that's related to this cost is insurance. Therefore, insurance expense. Okay, next we have commission earned. Okay, so since this is an earning, we would expect to have an income here. Okay, and this income is due to commission. So basically the business has provided some services and they would earn some extra money from the other party. Okay, so this account here is termed as commission income. Okay, next account here or next phrase that we see, earning from providing services. Okay, so when a business provides a service, it will earn income, right? It will earn income. So this income is not because of selling goods, which we would have used sales revenue, but because these are earnings from services, the appropriate account to apply here will be service fee revenue. Okay, next up, earnings from letting out space. Okay, so earning from letting out space just means the business has extra space not needed and it decides to allow other people to use that space, and they would earn from renting out this space. And since this earning or this income is due to space or rent, we would term this phrase here, or we would record it in this account called rental income. Alright, it will take you some time to be familiar with all the accounts, but you will get there. Alright, I'll see you in the next video.